Mr. Das, let me start by asking you, because this is an area that you've been studying for a while. We're currently at $100 billion, and the target is $500 billion by 2020. Do you believe there is enough momentum, there is enough engagement, there is enough liberalization on both sides to be able to get to the $500 billion target? Will we fall short? Could we perhaps even better it?
Great to be with you and to be here just after the President has landed. And I wanted to begin by saying that the President and the Prime Minister have invested hugely in this relationship, in taking it forward. And the Prime Minister was at the airport personally to receive the President, which is a huge, unusual, unique gesture on his part. I think that I'm very upbeat and I'm very optimistic about the future. And I think they are driving their bureaucracies and their officials in forward. But I want to focus on the business leadership here. For me, the CEOs Forum, the US-India CEOs Forum at the Apex, and organizations like USIBC, headed by Diane, are critical to take the agenda forward. Who is going to build the global supply chain connect? It's companies.
Sure.
Who's going to export? Who's going to import? Who's going to influence BIT? It's companies on both sides, you know.
There's no doubt about that.
For me, I think that we can achieve the 500 billion and more over a period of time. And I would go for 2019, 2020, definitely over $200 billion, because I think we've got, as Diane said, this huge wave now. It's not just a wind, it's a wave behind us. But the corporate sector has to get its hands dirty and get into it.
You know, the corporate sector has to get its hands dirty and get into it. As far as the Americans are concerned, and Diane articulated some of the concerns that American corporations have had, whether it's with retrospective taxation, transfer pricing, the ease of doing business, and so on and so forth. As far as the Indian side is concerned, what would the Indian corporation want from the American administration? Outsourcing, the rhetoric continues. Of course, the fate of the bill itself is unclear at this point in time. We would like the anti-outsourcing clauses to be done away with. The totalization agreement, hopefully we are going to start a dialogue or a discussion as far as the totalization agreement is concerned, which will allow repatriation of social security contributions back to India. What can we really expect as far as the India CEO wish list is concerned? You know,
Shereen, Indian companies find the US to be the best place to do business in. That's why in the last couple of years, about $15 billion plus of investments by Indian companies has gone into America. And while you mention the different problems of totalization and other things, it's still a great place to do business in.
Sure.
And you know, so when you go from 100, and I'm reminded of Bob Blackwell's comment about, you know, being trade was as flat as a chapati in 2001 when he was here. I think 100 billion is now flat as a chapati. And I think you're going to see both ways. Investment going ahead, and the problems of totalization or outsourcing, we will resolve these as we go along, because we'll become major trade partners together. You know, so I don't worry about these hurdles. I think we just have to get stuck in and move ahead together. Would you agree with that point of view, that it's, you know, there is an air of pragmatism when it comes to both sides addressing issues that have been controversial, that have been irritants, that have come in the way of increasing bilateral trade and investment? Do you think the business case at this point in time, the size of the Indian market, is going to trump all of the irritants that the US has had with India?
Well, I certainly believe that we're going to reach the 500 billion mark by 2020. And I say that because Tarun and I know how far we've come. 20 years ago, actually almost to the day, this month, Ron Brown, Secretary of Commerce, came here and had designated India a big emerging market. And when we put that out from the Department of Commerce, people thought we'd made a mistake, because how could India be a big emerging market? Now nobody blinks an eye. We've come that far. Also, we're at a higher level than the $100 billion, which is often quoted. The $100 billion basically is the trade in goods. If you add in services, we're already to $135 billion. And Prime Minister Modi brings exactly what we need. One, we need the continuation of economic reforms. He said in Washington that government has no business being in business. That's exactly right. We need time-bound solutions. Having bureaucrats show up on time in an office should not be news. But Prime Minister Modi,
except that it is.
Prime Minister Modi has made that be news. And we need sanctity of contracts. We don't need contracts which are signed today and then the government steps in at a later time and says, oh no, it's a little different. And the key to all of this, Make in India, is energy. If we don't have the energy infrastructure, there isn't going to be any Make in India. And that's where the U.S. and India can cooperate. It's going to take about $100 billion to put in 100,000 megawatts of solar. That has to come from a strong public-private partnership between India and the United States.
Let me ask you about the other issue, the controversial issue, and that is the IPRirritant, which has vexed this relationship. After the joint declaration in September, we saw both sides talking about setting up a joint working group. The Indian government has actually set up an IPR committee under the Commerce Ministry. A draft policy has already been prepared. It's up for stakeholder comments. It should be done by the end of this month is what I'm given to understand. Do you believe that there is a pragmatism even as far as IPR is concerned and IPR-related issues are concerned, and there seems to be a little more convergence than in the past?
I do think so. I think that, as is the case with many countries, and especially with India, as the economy develops and as the importance of IT in particular and software services increases, the respect, the need for mutual respect about IP and the awareness of that grows. So I think that pragmatic business piece of the services side, where IT services and business process management make up $86 billion of exports for India already, that will drive, from a pragmatic standpoint, the understanding for the need for protection of intellectual property and the other kinds of things that are needed, not just the legal aspects, but the security aspects around that.
You know, just taking that forward, and India has made it absolutely clear, at least publicly, that its intent to review the IPR policy has nothing to do with what the U.S. wants to do or doesn't want it to do. We've always maintained that we are TRIPS compliant. We've always maintained that we will not be TRIPS plus compliant just to please the United States. Today, we've got petitions coming into the Indian government saying, don't go back on what is policy as far as the patent law is concerned, because this is going to be the generic hub. It is the generic hub as far as pharmaceuticals are concerned. Do you believe that the U.S. will look past some of those issues, especially when it comes to pharmaceutical patent law?
So I think it's part of the package. So I don't think the U.S. will look past those issues. I think the U.S. is very focused on those issues, but that those and the resolution of those has to be part of an overall package of agreements which create a better business environment and create more confidence in the predictability of doing business in India, whether it be for IPR or some of the other things, or even the cybersecurity and the protection of the intellectual property itself, because, as you know, that's a constant threat in all developing countries and in developed countries.
Okay, let me talk about the areas of cooperation. One of the big headlines expected at the end of this summit is on defense. And we've made significant changes to our policy, whether it's procurement, perhaps not enough has been done. Delicensing has taken place. We've moved the cap from 26% to 49%. A lot of investors believe that that is not good enough. There is, of course, the 100% route, which is available on the back of transfer of technology. Do you expect a significant headline as far as defense is concerned at the end of this summit?
Well, maybe not a headline, but a tremendous interest in following up in surveying a number of companies that support BCIU, of which there are 200, in our 60th year now of continuous operation and 50 years since our first trade mission to India. People tell me that that's where they would invest when they step back and look at the India opportunity overall. But what's interesting to me is not so much the details, honestly, but when will we really address this notion that this is too complex? India is complex.
Is it a perception problem?
It is a
even as far as IPR is concerned,
partly.
the Indians say it's a perception problem. This business of adequate, not adequate, legislative protection, weak enforcement. Is it really? Is India suffering a perception problem?
The problem with my concern about this is that there's an impatience that's required, and then once investments are made, a long-term patience. But my view for all of those who care about the relationship, that treating it as complex just isn't good enough anymore, frankly. And there are things that governments can do, and I think for the Indian government, it's finally making progress on IPR. That loses billions of dollars in investment, not just in that sector, but it gives people the impression that it's just too hard. Secondly, on the private sector side, Mark Zuckerberg has said, let's get more H-1B visas. But this has become not only an issue for business on the high-tech side, but he's taken this farther to talk about comprehensive immigration reform. So for both private sectors and the non-resident Indian community, let's engage. Let's not wait for others to solve our problem.
Ashish Chauhan, let me ask you this specifically as far as the financial sector is concerned, and this is another big area of collaboration between the US and India. Deepening the bond markets, we've heard this for forever now. We've opened up the insurance sector. Of course, it still has to go through Parliament. It's been done by way of an ordinance. From a financial sector reform point of view, what more would you like to see happen, and where could be the possible areas of collaboration?
I think Diane mentioned very well that you need predictability and consistency. And somewhere, I think both sides, the unilateralism actually hurts everywhere. So for us, there has been a hurt on the side of the retrospective tax. But on the US side, it's the FATCA, which has created an issue where it's totally unilateral and where Indian brokers and Indian mutual funds have to report to US authorities. Now, nobody actually even heard of that kind of situation where you are crossing the borders. And that is also raising not only the issues in India, but including in Europe, that Europe has now come out with newer regulations to hurt US. And so for us, we think there's going to be a huge issue breaking out where each country is taking things to their hand. And if we can control both sides or all the sides, then that would help, especially India.
I don't know how you're going to be able to control the US and Europe, but in terms of what you see happening now in terms of potential collaboration, despite the regulatory challenges?
No, there are, basically, the way we look at it is over the last 20 years, India has received around $220 billion of FII money in the equities market. Now, India requires much larger amounts, probably over next 7-8 years. We require $3 trillion in variety of activities, including infrastructure, in defense, in services, in manufacturing, and large part of it would also come from abroad. And in some sense, US has the savings, and India requires the sort of investments. And if we are able to create that framework, which is win-win, we are going to get huge amount of investments that is coming from US and the pension funds and so on and so forth. So somewhere a couple of months back when both of us were in US, people were asking me, saying what's going to happen going forward. And now suddenly you have seen the action between both the leaders, and there is sort of a relationship which both of them are investing, the governments are investing, and everyone else sitting here and elsewhere are investing. So I think it's a very good omen.